I offer a suite of proprietary indicators for TradingView, and today we will be talking about several main indicators. My preferable ones, Monkey Cycle Trader indicator and Monkey Cycle Trader indicator multi-timeframe version. Those indicators are available for subscribers of my premium trading chat room, and you can subscribe to them either at www.monkeymikesmoney.com or CastAwayTrader.com. Those are both my websites. And before we start, I want you to read that important disclaimer. We will be talking first about the cycle trader indicator. In my opinion, which is the most important indicator, and it tracks underlying cycles on just one chosen time frame, and it posts various trading signals. My favorite time frames are 5 minutes, 15 minutes, and 30 minutes. And the best signals are strong short, strong buy, buy pullback, short pullback. And we are going to look at them now. Let me open TradingView. So this is how TradingView looks like. By the way, it's a great time of the year to get subscription to TradingView. So we offer 60% discount. We may offer even bigger discount later this year by Christmas, or when we get closer to Black Friday. I think last year it was more than 60% off, but normally every year I renew my subscription during that time because it's the best time. So when you go to tradingview.com, you basically first need to create an account, and you do not necessarily need a premium account. You can start with a free account, and even with a free account, you will be able to use my indicators. You would only need to subscribe to live data, because otherwise you may be suffering from watching delayed data. So you will see what basically happened 15 minutes ago. And if you subscribe to data, live data, you will only be paying like $4 a month. So it's not that much. So we need first to open some chart. Let's scroll down. Let's click Nasdaq and click see more on advanced chart. And by the way, when you have a premium subscription like I do, you may put several windows on your screen. So you see it might be convenient, but you may start from using the free version. So I would suggest we start from scratch, like without having new indicators. So you click here and let's create new layout. So you will see basically what people see when we first start working with that. So you click QQQ, you don't see it because you click the right click of the mouse, click settings, and here we have symbol. Let's activate body, borders, and wicks. This is what you have. To get access to my indicators, you need to email me, and you will need to let me know the name of your TradingView account, not the email that you used for registration, but the nickname. For example, my nickname is CastAwayTrader. So you see logged in as CastAwayTrader. So this is exactly what I need to know to give you an access to the indicator. Let's start from Cat Cycle Trader. So you normally find them. You click indicators, invite only scripts. Those indicators are not available for public, only for paying subscribers. You click Cat Cycle Trader, and it takes a couple of seconds until it gets calculated. So first, it looks messy. How you can deal with that? So you can click any line drawn by that indicator right here, and you get to the menu of that indicator. And when you get to the menu of that indicator, you can unclick many things. Let's unclick all of them, and we will see what we still have. So it got recalculated. So this is what you see. You see horizontal red lines and green lines, and those red lines and green lines are cyclical support and resistance levels. And you can see that once price reaches a point where the algo detects completion of an upcycle, it prints resistance. Then it goes down, and when it reaches the point when the algo detects completion of a down cycle, it starts drawing that green horizontal line. Sometimes we can see that price keeps bouncing in between of cyclical resistance, red lines, green lines, red line, green line. Sometimes price overshoots the resistance, then it comes back, prints green line, then goes up again in another upcycle. When upcycle gets really strong and price can break out over the cyclical resistance. When it happens, normally, again, we have two different options. Price can slightly overshoot it, like for example here, so it undershot the cyclical support and then recovered. But sometimes price is so strong and it is supported not only by a upcycle on 15-minute chart, by an upcycle on a higher time frame, so it can break over the cyclical resistance and keep moving higher. The idea is to use that information, the information about automatically detected cycles, in direction of the trend. And here first, we can activate Show MTF Trend Line. So you click it, and you get a line that lets you identify correctly the direction of the trend. And here, for example, when you see that we have a green line, it points up. So it's a good indication that we are dealing with an uptrend line. And we can activate another line. It's a trend line from a lower time frame. So basically, we see that price keeps pushing up along that 20 EMA on that current time frame, 15-minute chart. Now the question is, so this is the core information we get from that indicator. Now we need to convert that information into trading setups. And as I mentioned, I have two favorite types of trading setups called strong short and strong long signals. Let's talk about them. So let's first talk about strong buy. I mentioned that sometimes price goes up to the resistance, respects the resistance, and turns down. That tells you that price is bouncing in a cyclical mode, and when probably, we have some equilibrium in the market. But sometimes when bulls prevail and we have a combination of strong bullish cycles, price does not respect the resistance, it breaks over the resistance. And this is the first condition for the strong buy setup. So price goes over the last printed cyclical resistance, the brown line. It keeps going higher and higher until it reaches some point where bulls get exhausted, and we get a pullback. And what's crucial is that pullback stops over the broken resistance. And that's the second crucial condition for the strong buy signal. So the algo detects the point when that pullback reaches the exhaustion point. So bears get exhausted here, but they were unable to push price back under the broken resistance. And that's the best setup you could get because the resistance is broken, new support is printed, we got a higher high, we got a higher low, and that's a reliable entry point. And look at what happened. We got another push higher, and the algo detected when the rally got exhausted. And this is where we got sell long set. Let's see when we got, for example, similar setup here. Price strongly broke over the cyclical resistance, made significantly higher highs, then dropped the next morning. And this is when algo detected a potential entry point and it printed strong buy signal. This is this is another strong buy. Look, price overshorted, found support at green MTF trend line and popped up again. And this is where Alga suggested we close the long. This is a situation when we get a strong short setup. So it's kind of inverse situation. When bears manage to break under the cyclical support, we consider it as a start of a downtrending move. And there are two potential ways to trade it. One is a risky way when you try to catch the price. Another way, you just wait until price drops and then retraces part of the decline until Alga detects that strong short setup, a pullback that makes a much lower high in comparison to the previous, to the broken support. And this is when it prints strong short, and we got another push down, and this is where Alga detected that the bears got exhausted. It's very important to note that sometimes that cover short signal actually nails the bottom, and that exit long nails the top, like sell long here. But in many cases, you will get at least one more cycle. Look, I call it like the bottoming cycle. We break under support, we drop to new lower lows, we come back in a weak pullback that makes a much lower high. Alga detects strong short, this is step 2, and step 3, another push down, that until finally it gets exhausted and Alga prints cover short. But look what happened then. We got another pullback, another resistance, another lower high, and another drop. And consider the cover short setup here as the bottom of wave 3, if you understand wave principle, then the pullback that follows a wave 4 and another push down in wave 5. Now it's good time to activate the second type of a signal. It's called short pullback signals and buy pullback signals. Let's activate them. Yeah, we got it. So you see the algo here detected short pullback signal. It cannot be considered a strong short. Why? Because the previously printed support got respected and we got a bounce. So the algo detected a new top of an up cycle and potential start of a down cycle. But because the last low was a lower low, and the high of the pullback was a lower high, that type of the pullback I call just regular short pullback. Again, the whole idea behind that indicator is to automatically recognize downtrending moves and uptrending moves and attempt to trend with the trend in the same direction. So here, for example, those red lines, they tell you that the price is trending down. You see it by algo printing those signals, short signals. So basically, algo thinks the same, that price is trending down. And the whole idea is that you wait for algo to print you a strong short and short pullback signals, and those are your entries, and you can exit when price tests the previous low. Or if you feel like more brave and aggressive, you wait until the indicator would pick up the bottom by printing a cover short signal or exit short pullback. Now, it's very interesting to note that the algo would detect different cycles on different time frames. Let's, for example, switch from 15-minute chart to 5-minute chart. And you will get different signals on different time frames. For example, look at the string of long signals on 5-minute chart, and I'll tell you, if you are a day trader, I strongly recommend you to use 3 time frames: 3 minute, 5 minute, and 15 minute. And you will get many signals on a day when price actually changes on those 3 time frames. And for example, if you use a premium version of the TradingView, so what you can do, you just click here and you can put 3 time frames one by one on one screen. So here, for example, you can put 15 minute, here you can keep 5, and here you can get 3. And you will have a plenty of signals to work with. For example, look at that 3 minute chart and 5 minute chart. So they stand one by one. So look at that. So you get here on one screen a triple bottom on QQQ. QQQ printed support on 15 minute first, and look at that, it printed it at 11 o'clock in the morning, 2 hours ago, and it successfully focused the exact bottom for that move. Look, price touched that green line. The green line was printed at 11 o'clock in the morning. Price touched that price at 12:45, which basically is 100 minutes later. Then if you want to pinpoint the exact point where you want to go along, you wait. For example, you start watching 3 minute and 5 minute charts, and you watch when we get the same cyclical support, and price touches it and finds a support. And here we can see that actually price printed support at 281 on 3 minute, 281.50 on 5 minute, and 281 on 15 minute. And it might look difficult to keep tracking several time frames, and this is why I ended up coding a multi-time frame version of that same indicator, and we will be talking about that indicator later in that same video. So you can see that on 3 minute chart, the algo detected a short entry in the morning around 11:18, and then it picked up the point when it detected where the down cycle on 3 minute chart was about to get completed, and it started to draw that green horizontal line, and this is exactly where price found support. So it started to print that green line at 12:20, and price tested it at 12:57, 30 minutes later. So you had enough time to get prepared for that trade. Now we can come back to one screen, so we will see more information. Let's remove those lines. Now I want to show you one more component of that indicator. So that indicator, it's like a toolbox. I put several different indicators into one screen because sometimes when you deal with a free version of TradingView or the cheapest plan, they have limitation on number of indicators you could keep on your screen. So which one I really like and which I find very useful, I call NYSE volume pressure and Nasdaq volume pressure. Let's activate them. What you start to get, you get information about cumulative volume for that specific day. So regardless of your time frame, whether it's 3 minute or 15 minutes, so you should see the same numbers here. When it's red, apparently tells you that sellers prevail today, and those numbers, we show the ratio between cumulative buying and cumulative selling. So when we have red minus, that means that cumulative selling exceeds cumulative buying for the day. Now let me show you that presentation, and I prepared several slides for you. The cycle indicator shows us the ratio between cumulative buying and selling separately on New York Stock Exchange and Nasdaq for every single day. Those numbers are not calculated during overnight and pre-market trading sessions. When we see a ratio around -3, that means cumulative selling is 3 times stronger than cumulative buying for that specific day. That is a sign of sustainable down pressure, meaning the market may continue going down. When we see a ratio around +3, that means cumulative buying is 3 times stronger than selling today. So let's come back. When you see something like -1.5, -2.4, basically it's noise. This is not how big trending moves are powered. So we need something at least for like a strong move down, something that exceeds -3, and for a strong move up, we need something that exceeds +3. Let's come back. When the cumulative selling exceeds buying by 5 or 8 or more times, that means we watch forced liquidation of margin longs, and that creates condition for exhaustive selling. Exhaustive selling is unsustainable, and it may lead to intraday bullish reversal. So when we have a gap down in the morning, and you see nice numbers like here, -10, -12, -15, sometimes we saw even -80. That essentially means that only sellers are active and buyers are so scared that we do not leave the caves, so we hide in the caves and we don't touch anything. And when that happens, that tells you that we have a huge imbalance in the market. So it's like, you know, on a flying airplane, all the passengers, they get on one side of the plane and they create imbalance. The same principle applies to ships. When that happens, you know it's too late to sell, and you should start looking for a long entry. The same happens when the crowd goes euphoric and we get cumulative buying exceeding cumulative selling by 5, 8, 10, 20 times. Again, that tells you, okay, the crowd goes wild. You should cool yourself down. You should not chase the price when that happens. This is why it's so important. And another way to use that indicator, when you have a move down, but you have green numbers here that tells you, you know, buyers are in control, that tells you that something is wrong. And normally, you know, volume tells you the right story. And for example, now, look, we got a move up, but we still have red numbers here. That immediately tells you that you should take that move up with a grain of salt. So you should not trust it, because that move up is not supported by buying. This is how important that indicator is. Another interesting story. So what I personally figured out, that nice numbers, volume numbers, are much more volatile than those reported for Nasdaq. And this is why when we see that nice numbers, cumulative selling, exceeds cumulative buying by -10, 15, 20 times, that tells you that retail goes bananas. We goes nuts. We got emotional. The move down is driven by fear, and therefore it's unsustainable if at the same time Nasdaq numbers would be like -1, -2, maybe -3. So when you see that huge difference in down pressure on NYSE, that tells you that, you know, what's normally what can happen is that brokers enforce retail traders to liquidate long positions, and that does not normally happen for a long time. That only happens for an hour or so, and then big guys buy out all that volume from retail traders, and we turn the market back up. So this is how I read that indicator. Again, I consider nice numbers as indication of what retail does, and I consider Nasdaq numbers as what big traders, big funds does. And for example, here you see we got a pullback. Pullback is done to a lower high in comparison to that high and to that high and that high. And the previous low made a lower low. This is why the indicator flags that potential short setup. You see the short, reload short was detected here, reload short was detected here, and short pullback is detected here. If price keeps going higher and violates that resistance 282.55, that's a red flag for bears. And ideally, when we get short setup, price should not violate that resistance. Sometimes it does and breaks down again, but unfortunately, we cannot predict with 100% accuracy the exact top. We only can try. We can also indicate one more type of signals. It's called show buy sell signals, and it adds additional signals. Look, sell one, sell one, sell one, sell two, buy one, buy two, buy three. Those kind of like additional signals, and they are indicated when price does not respect either cyclical resistance or cyclical support. So if price does not touch the resistance, you will never get sell one here. If price turns up without touching the support, you will never get that supplementary buy one here. But if price overshoots the resistance, then algo detects potential for the secondary higher high top, and this is where it prints sell one. And sometimes that sell one actually offers you a great opportunity to go short. And sometimes buy one picks up the actual bottom. So if price did not respect the green cyclical support, it undershoots the cyclical support, but then algo detects that bears get exhausted, so it prints buy one, buy one. If price keeps pushing lower, it continues to detect the same pattern, and it printed here by two, by three. Again, you can use that indicator on any time frame. We can go to an hourly time frame, and it will actually detect similar setups on high time frames. But what I personally discovered is those lower time frames, like 3 minute, 5 minute, 15 minute, maybe 30 minute, they are the most reliable ones. Let's see what we can say about that indicator. So that's about it, about that indicator. It's called CastAwayTrader indicator. And now I would suggest talking about the multi-time frame version of that indicator. Again, to change parameters of that indicator, you click any point, any line, any element drawn by that indicator. You get to the menu, you can check and uncheck different options, and you can pick those that work for you. By the way, yeah, I could only show you one more, show volatility band, my latest addition. So it draws a channel, and basically you can see that quite often price travels from one extreme to another extreme, and we see that could help you to validate those buy and sell signals. You can see when price touched lower channel, it kept bouncing up, then it opened way under the channel, and it started to go up like crazy. And the same happened here. It tested it one time, two times, three times, and then it popped. And by the way, here, for example, on 60-minute chart time frame, you can see that price undershoots the support. That's in general a sign of weakness. But here as well, price overshot the resistance, but then dropped back down again. In general, I prefer signals produced by ETFs and stocks to those that are generated by a data feed from futures, because this is QQQ and we can switch to NQ and we will get similar signals. But because we have those overnight trading hours, light hours, sometimes those hours distort the picture. For example, here you see the same strong buy signal, price overshot the resistance, came back, pushed up again, and only here the algo detected a tradable pullback, price tested it twice, and then popped up strongly. Look, it found resistance at the upper edge of the volatility band, and this is where the indicator detected signs of exhaustion, of bull's exhaustion, and it printed sell long signal. Here you see price drop down again, it made a high low, the algo detected buy pullback setup, price started to push up, but then it ran out of steam and price turned down again. So we cannot guarantee that every single setup would work out. And I would not consider every cyclical resistance as a short setup, and I would not consider every cyclical support as a long setup, unless you have strong buy or buy pullback setups and buy pullback signals, or you get strong short or short pullback signals, because we really want to be sure that we deal with a sustainable trend. And what those indicators do, they validate those resistance and support signals by additional signs that we deal, in fact, with sustainable move up or down. Now let's remove that indicator from the screen, and let's add another one, which is called CastAwayTrader indicator multi-time frame. It's MTF cycle trader. And let's get to the presentation. So now we will be talking about monkey cycle trader multi-time frame version of the indicator. The whole idea behind the cycle trader indicator and its multi-time frame version is the idea that was proposed in 1970s by an American engineer, J.M.Hurst, who proposed a cycle theory. He claimed that stock prices are in fact driven by repeating patterns, repeating cycles. And we can actually show the price of a stock. Let's imagine that blue one is a price chart of some stock. So what J.M.Hurst discovered is that we can actually imagine that there will be several underlying cycles, repeating cycles. You can see those cycles, each cycle, for example, green one, we keep making highs and troughs after a kind of repeating number of bars. So there will be cycles of a different period, where will be long cycles, like for example that orange one, shorter one like green one, and very short one like red ones. So he proposed several fundamental principles of cycle analysis. The first principle was proportionality. So his idea was that bigger cycles have bigger amplitude. So when we deal with, for example, a yearly cycle, like for example in crude oil, that tends to bottom in the mid of November in 2021, in 2020, and probably in 2022 as well, we can see that if we deal with a long cycle, its importance for the price is bigger than, for example, when we deal with 5-minute price. So we call it amplitude, the distance for which a cycle is capable of pushing price up and down. So when we deal with 8-year cycle, it would have the biggest importance and the bigger role in your cycle analysis. But probably when you are a day trader, you can disregard that, because on a daily time frame, on 5-minute time frame, whether we have up cycle in a 8-year cycle, or we have a down cycle and 8-year cycle, would not really matter to you. But let's come back to the second principle of a summation. Basically, it's a typo here. The principle of summation tells that by adding several cycles together, we can explain movements of price. So essentially, if you summarize all those 4 different cycles colored in different colors, you will get that value. And you can see the problem with cycle analysis is that those cycles, we sometimes stop and we find bottom at different points in time. And this is where the principle of synchronicity comes in handy. According to the principle of synchronicity, from time to time, several distinctive cycles reach the respective bottoms simultaneously. Let's look at the chart. We can see that here, all 4 cycles bottomed at one point in time. Here we bottomed at one point in time, and here we bottomed at one point in time. And the idea behind cyclical analysis is that when you can, if you could detect those cycles, most likely those will be the points when price itself makes an important bottom. And this is exactly what can be seen on the chart. Again, the blue line is a summation of those 4 differently colored cycles, and we can see that it perfectly aligned these at those points when 4 nominal cycles made those troughs. And finally, we can conclude that points when several cycles make bottoms at one time should be aligned with important lows on stock price charts. And that's the core idea behind the multi-time frame version of the cycle trader indicator. Let's come back, let's add it to screen. And we can see those labels, red labels. You see X4S, X4S. Those are points when 4 cycles reached its top. And you can see that it probably was not the exact top, but the second signal, it actually pinpointed the exact top of that move up. Let's go down. You see here, we deal here with 60-minute time frame. Again, it nailed the top of that rally, and we got a nice sell-off that lasted almost 1 day. Let's again here, it did not nail the exact top, but pretty much nailed the top of that rally, and we got a nice sell-off. The good thing about that indicator is that it can detect those points on every single time frame. Additional tool that I recently added is those green lines. This is when the algo detects oversold condition on 4 different time frames. So here we got a nice combination. We got 4 cycles bottomed here, and price kept pushing down, but the algo detected that price was way oversold. It did not secure the price and did not protect us from getting another lower low, a spiky drop pre-market the following day. But look how price nicely recovered and pushed up again and kept pushing high again until we get a new quadruple resistance signal. And those quadruple resistance signals and quadruple support signals are reported by an automatic bot in my chat room. And this is, now you better understand what those quadruple support and resistance signals mean. You can switch, for example, to 5-minute chart, and you will get similar signals on a lower time frame. And you will, for example, if you are a day trader, for example, here you see it detected a top. So look, on 5-minute chart, it produced 2 bottoming signal, 4 cycles of lower time frame of shorter period and smaller amplitude bottomed here, and we got a very nice push higher. Then it detected, let me just remove those sell and buy. I can see it, I don't see it here. I would need to add the signals to remove those sell buy signals. So the most important part of that indicator is those blue labels and red labels that show you moments when 4 cycles reach top and bottom. Sometimes we can have this, we can get another type of a signal, triple support and triple resistance, but we are less reliable than quadruple support and quadruple resistance. Sometimes quadruple support actually nails the exact bottom, like here, here, or there, but sometimes we detect it, but price does not consider it as an important bottom. And I think I could make it better. I just got an idea how to make it more precise and more accurate and to get rid of that false signal. And here you can see we got repeating points when the algo detected signs of topping. And here you can see we start getting quadruple support signals. First, we got it pre-market, and we got a nice pop, and then we got another one around 1 p.m. Eastern time. In my opinion, it's a very interesting indicator. It really can help you to trade, whether you are a day trader or you are a swing trader. So it will work on everything, on cryptocurrencies, on stocks and futures. Okay, so this is how the multi-time frame indicator works. One more thing I would like to explain you about the cycles. It's easier to pinpoint bottoms when you deal with multi-time frame cycle analysis rather than tops. And this is, and you can see the answer why on that chart. You can see that according to the principle of synchronicity, stocks tend to make bottoms together, important bottoms together. But when we deal with tops, we do not have that beautiful picture. This is how major tops are made. You can see that different cycles top at different times. In that particular case, that orange cycle is the most important one. It's the strongest one. But look what happens. It reaches its top here, but it normally does not correspond to the top maiden price. Why? Because we have that green cycle. And normally when the orange cycle reaches its top, then turns over, rolls over, starts to going down, the green cycle would keep pushing higher, higher, higher. And here you have two conflicting cycles. And in that point, the green cycle would have an important significance for bulls because its importance, its strength would be stronger than the pressure, down pressure from that orange cycle. So normally the rule of thumb is the cycle reaches its maximum strength when it goes into the final half of the down cycle. So the upward pressure would be strongest here and the down pressure would be strongest here, especially if two cycles start pushing down together. This is when those cyclical support levels, they stop holding price. Price breaks under cyclical support because two or more cycles point down together. So here, look, we get yellow cycle down, red cycle down, yellow cycle down, but we still have a topping blue-green signal. And this is where basically price reaches its top. It could be a higher high than here or a lower high than here. It could be wave 5 up if you know the Elliott wave theory, or it could be corrective wave B. So that could be wave 3, A of 4, B of 4, and C of 4. But when actually that green cycle finally rolls over and it stops supporting the upward push in prices, finally price starts to start moving down in an accelerated way, and until all 4 cycles reach their respective bottoms together. Again, so the problem with identifying the exact top is explained by the nature of cycles. We do not top at one point. So we normally top at least in 2 points. This is why very often we see those double top formations. And this is why when you deal with the multi-time frame version of the cycle trader indicator, you can see 2 clusters of topping signal. It's kind of one cluster and the second cluster. And the second cluster would be more important than the first one. Sometimes we are lucky, you see, to get one clean topping signal. And sometimes we get a string of topping signals and price keeps pushing higher. That tells you that you at that point, smaller cycles, they reach their tops, but there must be a cycle of a higher degree, because here we deal with 5-minute time frame. So if we switch to 60-minute time frame, which is left behind the scope of that particular time frame, we will see that it was keep pushing higher. But again, it all depends on your preferable time frame, whether you are a day trader or a swing trader. I personally like, even if I prefer day trades, I would prefer, for example, 30-minute time frame, because if I get a major topping signal, I would have plenty of opportunities to go short. For example, you see, first, the algo detected those purple lines. Those are signs where the rally got overbought on 4 time frames. Then we finally got a signal that 4 cycles stopped. Price still pushed higher. Remember, I showed you that chart. Look, probably we were somewhere here. This is where the multi-time frame version of the cycle trader indicator detected the point when 4 cycles stopped. But there probably was one more cycle that has not rolled over yet. You see that small part of the move up until it finally rolled over. And this is where we got that final push high. But if you deal with 30-minute time frame and it tells you that's kind of a major top, you could expect price to push a bit high, but starting from the point when price pushes to a new high, you can start building your short position. And you can short like here, there, and then you see that something changed. Prices started, to roll over. This is how you can use that indicator. Look here, it clearly nailed the turn point. Look at those beautiful green lines. Again, this is the last addition to that indicator. You have an alert, by the way, when you can set up for yourself. To do that, you just click any element drawn. To set an alert, you right-click any part of the chart. You see here at alert, you click it. And here, first, you go to condition, you click multi-time frame cycle trader, and here you have different types of signals. This is quadruple resistance, this is quadruple support, this is MTF overbought when we get those purple lines, vertical lines, and this is MTF oversold, the green line. So you cannot keep watching charts all the time. So you can set your own alerts. You click MTF oversold. You need to click once per bar, because if you click only once, the very first alert would erase that alert and you will never get that signal again. You will need to keep setting it every time a new one. So you want to set it only once, and it will keep working for weeks in the future. And so I suggest you click once per bar, and here you can click open-ended. I think it's only available for premium accounts, but for free accounts, I think it would allow you to set alerts that would be working for the following 4 weeks. Then you can check notify on app, and it's great if you cannot watch the screen the whole day. You click notify an app, you can install TradingView free app on your smartphone or tablet, and you will get pop-up notifications, so you will never miss an attractive trading setup. You can also click show pop-up, so you will get that pop-up notification on your desktop version and mobile version of the TradingView notification. And you can put alert name, so when it goes with a pop-up notification, you would understand what it tells you. So you can set overbought on 4 time frames, and you click create, and basically the system would record that alert, and it would keep alerting you to those conditions. Unfortunately, you would need to set alerts like that for every type of trading signal, for every indicator, for every instrument, and for every time frame. And this is exactly what I personally did. When you have a premium account with TradingView, it would allow you to set up 400 different alerts, and this is what I did. And it would not take you that long. It sounds scary, but it would not. And basically, you can set alerts. Again, I would, if you deal with multi-time frame version of the cycle trader indicator, I would recommend setting alerts on 30 minutes, 15 minutes, 5-minute charts. You can also consider setting alerts on 60 minutes, maybe 120 minutes, if you are more like a swing trader rather than a day trader. This is what I was going to tell you about the multi-time frame version of the cycle trader indicator. And now I want to show you my next indicator, which is called Gann's level. So I have already recorded and posted a video explaining how to use that indicator. You can find it on my YouTube. Go to Monkey Makes Money on youtube.com, and you will find that video there. But let's talk about that indicator once again. To do that, you go to your indicators, invite only scripts, and here we need to find that Gann indicator, Gann levels. You click it and you wait until it draws lines. Okay, so let's zoom out. First of all, what you can see is those H3, H2, H1, L3, L2, L1 labels. Those labels is how the algo detects pivots, points where price made important lows and important highs. The whole idea behind that indicator is the theory proposed by Gann, and he is a famous analyst. Unfortunately, in the notes he left behind, you would be struggling to understand what he really meant, because he did not try to do a great job explaining his findings. But you can still find several books, and in one of those books, I found one formula that would allow you to focus support and resistance levels based only on prices made at previous highs and lows. And this is why those red points are starting points to calculate potential support levels, and green points would be starting points to calculate a potential resistance for the following move up. Let's eliminate everything except H3, for example, the last high pivot. Let's activate 1, 2, 3, 4 cycle. And for example, we can use QQQ and we can switch to 2 hour just to see bigger picture. For example, you see that QQQ, it topped in August 2022, and based only on the price at the top, that indicator calculated several important levels. And you always pay attention to 3/4 of a cycle, 2 cycle, and 2 full cycle of the high. And we can see that 1 cycle down of the August top actually nailed the bottom. Yes, it got overshot 4 times, but anyway, that 265 level, it stopped the decline. Not only that, that 3/4 of a cycle of the high made in August became as an important resistance. So you can use those support levels not only as support, but also as resistance. Look how price stopped a pullback in October, then it popped to that level again in late October, and now, you know, it popped over, but then it came back down and it just stalled at that same level. Now let's switch from support to resistance. We deactivate show support and we activate show resistance from L1, show resistance of L1. And look, we almost hit that 1 cycle up. The half cycle up of that point was an important resistance. 3/4 of a cycle up of that low became an important resistance. But sometimes, you know, we could only get a shallow pullback and then price push higher again. Let's activate low 1, low 3. Here we are. So they are 2 small moves for us, you know, because, for example, if we see resistance from L1 point, L3 point, basically we will see, let's 1 L3. So we can see that of L3, the resistance was 287 half cycle, and this is where now price found resistance. Let's activate resistance from L1, and exactly half cycle up of L1 exactly nailed the top of that move. So what I personally noticed, that quite often resistance of the secondary low, not from the major low, but from the secondary higher low, works better than projections made from the lower low. So how you can use it? So basically, when you expect a move up, you think that you deal with a major bottom. So for example, you can look at half cycle up of that number. That would be your expected move down. And this is important to understand, that the algo detects those inflection points automatically. And sometimes, for example, you want to see, so what would be the down projection from that point? And when you look at 2-hour chart, you will see that algo does not detect that point as an important pivot. But there is a trick. You go to a lower time frame. Let's go to 15-minute time frame. And now, boom, that last high is peaked. So now you want to see potential support of point H3. You go show support of H3. And look what you have. You can see that the very first micro support of 1/4 of a cycle would be located at 276.39. And basically, the second support would be 260. Let's check SPY. We can check H3. This is the major top. And the first important support would be 382.50. Let's check ES mini. We can see what we get from H3 point. Show support from H3 point. It doesn't show. Let me adjust it. Recently, I added auto adjustment function for Forex, and it seems like it works really good for futures as well. For example, look, when we looked at the core price, we didn't see any levels because the magnitude of that number is higher. It's, you see, it's a 4-digit number. But if we adjust to Forex, we see that the drop stopped exactly at 2 down cycles. You see here and there. And this is another interesting way of using that indicator. Let's check resistance from L3. We deactivate that one. We look at resistance at L3 and look, 2 cycles up, nailed the top in ES mini. That's again just to see that automatic adjustment for futures. You need to activate adjust to Forex option. Let's see how NQ worked. And what we can get here, look, the same story. We had that major top made last Friday, like major top for 15-minute time frame. And if we apply Gann's levels indicator with activated adjust to Forex option, we can see that 1 cycle down nailed the exact low made this afternoon. I think it's super cool. Let's check projections from L3 point. So we deactivate resistance from it's already activated. So let's activate here. Resistance, so we need to, no, you see, for Nasdaq it doesn't work well, so I would need to add additional formula, because Nasdaq has 5-digit number and ES mini has 4-digit number. So it works well for ES. I would need to change the formula so it would accommodate in Q automatically. Let's look at SMH. Let's deactivate Forex feature. It's deactivated. Let's see, for example, the previous low, L3, and we can see 3/4 of a cycle. We can see that again, 3/4 of a cycle and full cycle of the last low are very important resistance levels. And we can see that SMH had resistance at 222.93. It popped up over that level, but got sold off nicely. And for example, we can go to 2-hour chart. So when we can go to 2-hour chart, the algo would detect different pivots. Let's see, for example, support from H3 top made in August. We click show support of H3. Let's deactivate resistance. And for example, you can see that that important low made at the end of September was nailed by 1 cycle down projection of the top made in August 2022. We can see that 3/4 of a cycle also made a very important level. Price popped here, then finally tagged it, popped up again, and look, price came back up to that level once it tested the next support at 1 cycle down. So that's why, again, you can consider those support levels as resistance as well when price keeps moving up on the way higher. Finally, I want to show you my newest addition of the indicators, and I called it a cloud trader indicator for TradingView. And it tried to use the same idea of identifying cycles, and it is supposed to generate buy and sell signals based on cycles and different oscillators. To activate it, we go to indicators, CAD Cloud Trader. We activate it, and we can see a number of lines and signals. So the first of all, what we should pay attention to, let's deactivate show signals. So we will only have a number of lines. The idea is when 3 cycles are red and point down and price is under them, so every pullback is a shortable setup. In contrast, when we have all 3 cycles green and we point up and price holds over them, every drop down is a viable setup, is a viable long setup. So the algo tries to detect those numbers. You can see that algo keeps plotting red dots. Those are pivots, potential turning points, and green dots. Those are potential points when price could go up. I suggest you should not need to consider green points as long entries when price is under the red pointing down cycles, because in a downtrending market there is no such thing as a support. Remember it for the whole life. In a downtrending market there is no such thing as support. Only resistance matters. In an uptrending market, there is no such thing as resistance. Only support matters. Why? Because I showed you before, when several cycles are combine their power together, they tend to overshoot all reasonable resistance. When 3 cycles push the price together at one time, price would tend to undershort the support. Now let's activate those signals. You can see that the algo tries to detect those pullbacks when we deal with 3 or at least 2 cycles pointing down, like here. Here we got a strong pullback, and for example, what you could do, this trading strategy is super simple. Once you get short setup, you can go short immediately, setting resistance, your stop, protective stop, over the previous stop made at the bar when the short signal is printed. For example, here it would nail a big move down, here it would nail a big move down, here it starts promising but then moved up, but at that point you would set your protective stop so you would not lose much. On the second setup you would get stopped out, but the next move down you would nail it and you would cover it. Here you see several false signals. That signal is false. That signal is false, and I still keep working on that indicator, but I see it very promising, because I see very many good signals here, like that short, that buy, that short, that short, that short, like to some kind. And another way how you can increase profitability of trading signals made by that indicator is that once price starts moving down in your favor, you could push your protective stop down to the break-even, to your entry price. So even if we get a false signal, you would not lose a penny, right? Because you would get stopped out when price turns up, because you got a small move down, you would be able to push your protective stop lower to the price where you actually entered that trade. And again, that indicator works on any time frame. It would deal with different cycles. And the lower the time frame, the lower would be expected move up or down. And here you can see it nailed several nice moves, especially short. Again, the rule of thumb is that when 3 cycles are red and they point down, you should not attempt going long unless you start getting a cycle underneath that turned up here and created kind of a support, and you can use that cycle as your protective stop in that particular case. And for example, all 3 buy signals, they produce some move down, but that's a risky trade in comparison to those trades when all 3 cycles point down or all 3 cycles point up. Look, every short here, it produced small move down, but every buy signal here, when all 3 cycles pointed up, produced the final popped up in SMH, and you could have made much bigger profit than trying to collect pennies. But again, it purely depends on your personal style. And look, when all 3 green lines point up and price stays over them, you never attempt to short, because when price goes over and 3 cycles point up, as I mentioned, 3 cycles combine the upward pressure, and this is when price tends to trend. It tends to overshoot any reasonable resistance. That's actually it, and it's been more than an hour. And if you have any questions, go ahead and use that chat, and you can ask me any questions you have after the presentation. Okay, so I don't get any questions, so I think I provided you with a lot of information to digest. Watch that video, watch its recording, and if you have any questions of how to read signals produced by those indicators, please contact me by CastAwayTrader@gmail.com. Again, let's talk how you can get access to those indicators. You can go to monkeymakesmoney.com. This is one of the websites I run. You go pricing, and you can pick one of those options. You can get a monthly trial, and if you don't like any indicator, you can request to cancel the subscription and request 15-day money-back guarantee, no question asked. Or you can pay less by subscribing to a quarterly plan, or you can save up to 33% if you subscribe to a yearly plan. Another option is to go to CastAwayTrader.com, my main website. And you click pricing. It's interesting how slowly it works on the edge. It's much faster in Chrome or Firefox. So if you go to CastAwayTrader.com/pricing, you will see 4 different options. To get access to all those indicators and many other indicators that are available for subscribers only, you need to be subscribed to all-inclusive plans. either monthly all-inclusive plan or quarterly all-inclusive plan. So in addition to Elliott wave analysis posted on a regular basis throughout the day and every Sunday, you would get complimentary access to those TradingView indicators, and you will get complimentary access to a trading chat room hosted on Discord, which is where you will see a live bot posting those live trading hours. Thank you for your time and good luck with your trading.